you and I had some epic showdowns on television. You called it everything from crypto garbage to one time you forbid me from owning any more of it. But I think that there's a lot of changes that have happened in the market, both from a regulatory standpoint and also some of the market dynamics. And you now are comfortable starting to allocate to it. So maybe walk us through kind of what changed and then how you're thinking about allocating to Bitcoin and cryptocurrencies today.
Yeah, so what changed is exactly what you said, Pomp, the regulatory environment. I work in a very regulated world. I'm an investor in so many different financial services companies that are reporting issuers. And so we don't have the luxury of being offside with regulators, not now, not ever. And in 2017, when we were talking about those epic moments, and it's true because I get those things shoved in my face every day, but I point out that when things change, I change. That's when I took my first Bitcoin Ethereum positions in 2017. Obviously, I've done very well with those. But recently, after the regulators in Switzerland, France, Germany, Australia, England, Japan, Canada, all started to change their stance on crypto, it allowed me to start to allocate to it in a compliant way. And that's really what got me going. Obviously, this is an asset class that's here to stay. It's still going through a very nascent phase. I'll be putting a lot more into it as time changes, and still the regulator's not 100% on board, we all know that, but things are getting better, not just domestically, but internationally. And so I'm an international investor, and in many countries where we're talking about Bitcoin or Ethereum or other assets, other crypto assets, tokens and coins, the regulators opened up.
What's the current allocation percentage? I think at one point we talked and you said you were at 3%. Are you still at 3%?
No, I've told everybody, I've disclosed that by the end of the year, I'll probably be at 7%. That's the target. Because I've gone beyond Ethereum and Bitcoin. I have a pretty big position in USD right now, USDC. I'm moving into some other assets that I'm negotiating right now. I have been struggling with this ESG issue around mining my own coin. As you recall, that topic was really forefront at Bitcoin 2021 when I moderated, and I think you were there, the major miners and how they're trying to deal with this carbon offset issue. I still get people asking me about that. I still have sovereign funds that I service through some of my other companies asking me, what are you going to do around this ESG? Because they have these compliance committees. And I know a lot of people debate this issue, but it's not going away. And so I think you're going to see a real move towards places like West Texas, solar, wind, ideas around new generation where it's completely compliant. Hut 8, I'm a shareholder in there now. Jamie Leverton does sustainable mining with flare gas. So, I mean, there's ways to get around it, Pomp, and I'm using that to increase my allocation. But I think by the end of the year, across all crypto assets, it'll be a 7% weighting. And it could go as high as 20 if I wanted to, but I'm just taking it one step at a time.
What would it need to take, or what would have to happen for you to go from the 7% target today to 20%?
Performance. Performance. I mean, that's basically, I'm not a cowboy here. I'm actually allocating capital towards achieving a distributable return of between 6 and 8% a year. And so, we have a lot of volatility in Bitcoin. And right now we're kind of 61% back from the lows, and that's great. But not every crypto asset has to be that volatile. So when you start to build out your portfolio, let's go to USDC, you actually can take that as a relatively stable asset and write contracts on it for 60 days, 30 days, 90 days, and generate 3.5%, 4% yield, which is what I'm doing right now. And so I look at it as a portfolio approach. Some of these things have volatility, some don't. But the biggest problem, which is holding all of us back in the crypto industry right now, is compliance at the institutional level. You go in and you say, look, everybody's talking about this. All right, let's say I'm running $1 billion mandate. That's not uncommon. And I want to put 10% into crypto. You have to be able to find a platform that can link to your internal reporting and your external regulatory. It's not like if I'm putting a 10% allocation on $1 billion, that's $100 million. I'm not going to download an app on my phone and put $100 million into it. I'm going to have an institutional compliant platform. And the industry's not there yet, Pomp. It's got a lot of work to do on that front. And the more we move towards that, the more capital is going to be coming in.
How do you think about the breakdown between Bitcoin, other coins, and then what I'll call like the miners or more publicly traded cash flowing type businesses. Do you have a framework as to how you're trying to allocate across these?
Yeah, the 7% allocation is allocated across all of the above. Let me give you an example. I talked about Hut 8. I have I'm just a shareholder. And the reason that I met Jamie was when we were making a reallocation to some of our office space, she took some of my office space, which I'm very proud to have done that deal with her, and we got to know each other. And I was telling her back then, it was a few months ago, the challenges I was having coming out of the Bitcoin 2021 conference and all of that stuff about ESG and which coin do you own and all that. She said, well, look, I keep every coin that we mine at Hut 8. It's sitting on the balance sheet. Every time we get awarded a coin, it stays there. I lend it out so I can get fiat currency to pay my expenses, but I own the coin. So that you're going to trade my stock in a very high correlation to the price of Bitcoin, because the more I mine, the more it stays on my balance sheet. I'm a proxy for the coin. I said, that's a very interesting model. I'm interested because I know every coin you've got since you started has been built on a compliant basis towards ESG. So I'll become a shareholder. So I bought some of her stock, and the stock is volatile as Bitcoin is. I think I'm up 61%, and Bitcoin's up 61% since I bought it. So she's really starting to trade with the value of her balance sheet. That interests me a lot to solve for my mining issue, because if I want more allocation to mining, I have no risk of getting called out from compliance around ESG with Hut 8. Now, I don't want to sound like an advertisement for them, but if more of the miners did what she is doing, you get more institutional capital coming into the mining infrastructure, which we don't have right now. It's very hard to raise money for mining infrastructure, because if you got a facility in Tennessee or Mississippi or something like that, which is not compliant because there's coal energy there, you get all these headaches. And that issue's not gone away yet.
So I think that we talked about this last time you were on the podcast. My take on it is the ESG folks have lost their minds. They're putting all these undue pressure, and they don't really understand Bitcoin and mining and all of that. I think that you're trying to solve not for what I'll call personal belief and you're on some crusade, but more so from a compliance says I have to do X. I got to figure out a solution so I can allocate capital to an asset that I want to allocate to. So it's very much like you're giving a box and you're trying to play within that box, right? With that said,
well, Pomp, I want to get detail on that. I have no choice. I have a compliance department. They have an investment committee. On top of that is a sustainability committee and the ethics committee. I don't have a choice. There's no negotiation. I got to do what they say. And that's the same for another $1 trillion worth of buying on Bitcoin. Same problem. You don't have that problem. I have that problem.
So when you think about this, the Bitcoin that ends up getting mined that meets all the milestones on this ESG kind of talk track, why are people not willing to pay more for it? I think at one point there was a thought process, and maybe we just haven't seen will they or not, but it seems like folks, they want that Bitcoin, but from an economic standpoint, I haven't seen anyone paying more for it. So one, have you seen anyone pay more for it? And then two, do you think that's something that will happen, or do you think that that's unlikely to happen in the future?
At the beginning of this journey, I thought it might happen, that there'd be some kind of wrapper on clean coin versus non-clean coin. I don't believe that anymore. I think you need fungibility across every single coin, all 21 million of them. And I think what's going to happen is for incremental buying coming in, and I'm saying $1 trillion, if my clients, just the institutional and the sovereign funds alone, and not all mine, but that whole asset class of investor, just did a 1% allocation towards just Bitcoin, that's $1 trillion worth of buying. So we really, really want to solve this problem as an industry. So it's not because you get on one side of the debate or the other. They simply can't check the box and invest until their compliance committees say yes. So all of these new mining operations, what I think is going to happen is you got the existing coin out there now, provenance known or not known. Got it. But if you're setting up a new operation to mine coin for the next 30 years, you're going to get a lot of institutional interest in that infrastructure cost. Let's say it cost you $500 million to set up in West Texas. You could probably fund that if you guaranteed those institutions that every coin awarded would go on the balance sheet, stay there, and they could claim to their compliance committees it was mined sustainably through wind and solar, which you can do in West Texas. So you got the China thing shutting down, you've got all these compliance issues in Eastern Europe. All of this stuff is happening in the background. And it started, the height of this frenzy was in Miami at Bitcoin 20.